What's up you guys, I'm Dan, this is Frugal Not Cheap, and today we'll take a look at the best checking accounts of 2024. Okay, so of course best is a subjective thing. So what I'm going to do here today is just go through my criteria for a checking account and give you what are my favorites as of 2024, at least the ones that I know about. I'm sure there are some out there that I've never heard of that are really great too, so please let us know about those in the comments below. Okay, so here are my 5 criteria. 1, that they be actually at a bank. 2, that the account be FDIC insured. 3, that there be no fees. 4, the bank should pay me. And 5, for those of you that still love cash out there, that there be an ATM network or at least ATM reimbursements. So I'm starting with number 1, that the account be actually at a bank. This might seem kind of like a silly one, but it's not. There are some kind of companies out there, fintech companies, that offer accounts where it looks like the account is at a bank, or it looks like they're a bank, but actually the bank is a separate deal. So for instance, there was a lot of trouble with Yada, which is an institution that a lot of YouTubers, financial YouTubers, were promoting a while back. Anyway, the thing was that the money was actually supposed to be at a bank called Evolve Bank and Trust. So those accounts at Evolve Bank and Trust are or were FDIC insured. But then there was this fintech middleman called Synapse. And then, of course, there was the front-end app called the Yada Bank, right? The Yada app. So even though, again, the accounts at Evolve would be FDIC insured, things went really far south because Synapse claimed that there was like $112 million in funds as of their trial balance report on May the 17th. But Evolve said those funds were not and had not been in their possession. Yikes. So I'm not sure exactly where the dust has settled on this one. I don't know if they finished their forensic accounting and whatnot to figure out what went wrong. But anyway, a really big mess, and I feel sorry for the people that took the advice and got their accounts there and then have run into trouble, unfortunately. So this criteria would also remove places like UFB Direct, which I saw when I looked up, best checking accounts, and NerdWallet popped up. The bank products that are offered there are actually at Axos Bank, and Axos Bank does offer accounts directly, but I don't really have any experience with them. So anyway, any checking account product that I'll choose will be at a bank. Next, we have FDIC, or Federal Deposit Insurance Commission insurance, and so obviously this protects your accounts up to $250,000, and this is absolutely a necessity. Not much more to say there. Next, we don't want to have any fees. And so actually there was a post on X that prompted today's video. Someone had asked out there, what's a personal finance hack you believe everyone should know about but few actually do? And I didn't put their handle up because it's not sort of family friendly, unfortunately. But if you look up my account on X, then you'll be able to figure out who it was if you're really curious. So my response though was that you don't pay banks to hold your money, that they actually, should pay you. And it's amazing to me that people still pay fees this day and age. Now, with a lot of banks, you can avoid the monthly service fee if you meet a couple of criteria. One might be a minimum balance, could be $2,500 or $5,000 or something like that. And then the other could be for having direct deposit. However, this kind of stinks though, because let's say that, the direct deposit, of course, is from your job. At some point you lose your job and you no longer have this direct deposit coming in. This would be kind of the worst time to be stuck having to pay monthly service fees. So this eliminates some accounts that I would otherwise be in favor of based on my criteria. One of them would be E-Trade Max Rate Checking. This is actually now at Morgan Stanley Private Bank. But they're owned by them or whatever, I don't know. There's a very close relationship. So it's not as hinky as, the Synapse thing. But anyway, they do require either direct deposit or the $5,000 balance in order to waive the monthly service fee. And that monthly service fee would be $15 if ever you weren't able to meet those requirements. So that kind of stinks. This also eliminates the Chase family of checking accounts. There are quite a few options. You've got Chase Total Checking, then there's Premier Plus Checking, and beyond that there's Sapphire Checking or Sapphire Banking. For all of these, you can't avoid the fees if you have a certain amount of assets with Chase. More information on that in one of my recent videos about premium or private banking, but suffice to say they don't meet the criteria for today's video. My next criteria is that the account will pay me some kind of interest, even if it's small. This was the second kind of part to my post. I first said, we shouldn't have to pay fees, but then on top of that, it would be good to be paid something in return because, of course, the bank is able to use those deposits and through our fractional reserve requirement system, lend those funds out and earn a return, and I would like a little piece of that, please. Going back to that E-Trade account, that would pay a 3% APY, which is very good, but again, because they would charge a fee if you don't meet the requirements, then we're going to skip them, and we'll look at the ones that don't have these requirements. Another honorable mention here would be Discovered Bank, which a lot of people seem to, have good feedback about, and you can get 1% back on their card, I think, on purchases using the card. But this is not exactly the same as interest, and the interest rate that they offer is 0%. All right, so who's left? Well, we've got SoFi, which pays 0.5% as of this filming. Of course, all the rates that I mentioned in today's video are subject to change, blah, blah, blah. I mean, that's just, right? That's where they are right now. And then, of course, whenever you're watching this, do your own research, check it all out, look what the rates are and all that kind of stuff. So SoFi pays 0.5%. Then we've got Capital One 360. They pay 0.10%. Then we've got Ally Bank paying 0.25%. These are three decent examples where there's no minimum balance requirement in order to get this APY. So that can be another kind of, not a trick, but another requirement that's out there is that, you only get the APY if you have a balance beyond a certain amount, or you need a certain amount to start to get in order to get, trigger the interest payments. Other places you might get like a higher yield on your first X amount, but then any funds beyond that, you get a lower yield. So anyway, always have to look at that. But with these three, as of right now, there's no minimum balance to get those APYs. And then that final fifth requirement, again, is just for the people that really love cash, and this is an ATM network or reimbursements. For me, it's just really not a concern. I think maybe traveling internationally, I might want to get some cash sometimes, but domestically anyway, the times when I might need to either deposit or get some cash are vanishingly rare these days. So on this note though, Capital One does offer access to 70,000 fee-free ATMs. SoFi has really good access as well to 55,000 all-point ATMs. And then Ally grants access to 43,000 all-point ATMs. I'm not sure why the number is lower, even though it's the same network here for Ally, but However, they do offer something that SoFi does not, which is a reimbursement of up to $10 per billing cycle for non-all-point ATMs. So this is a really good benefit. Basically means you're not paying ATM fees anywhere for those rare occasions where you have to go, as long as you don't exceed that $10 reimbursement limit. And then though, kind of saving the, at least my favorite for last, there's Charles Schwab Bank. So the high yield investor checking here pays 0.48% and will reimburse ATM fees around the world. So they're my favorite for that reason. Which of these have I had personal experience with? Well, I did have the max rate checking back in the day when it was just E-Trade. But I haven't, had any dealings with them since they were bought by Morgan Stanley. I've also had the Ally checking and savings product and really enjoyed them. I thought they were quite good. And then now, currently, I have Charles Schwab and I'm very happy with it. I bet the Capital One product is good too. I hear all kinds of good things about it. And I do have experience with Capital One credit cards. As you know, the Capital One Duo is my current setup. And then also had briefly a business checking account with Capital One. And it was good, but they did have a minimum balance requirement that I didn't want to have to meet, so I went elsewhere. Looking at SoFi, everything looks good on paper, but for some reason, and I can't tell you why, I just don't get the warm and fuzzies from them. I really couldn't put my finger on exactly why, but something about it just doesn't feel as good as the other options. Have you tried them? Let us know what your experience is like in the comments. Also, let us know if there are other accounts out there that I haven't mentioned that would be good. In any case, those are my top 3 picks for 2024. They're going to be Capital One 360, Ally Bank, and also Charles Schwab Bank as well, with that high yield investor checking that is my current choice. Hope you enjoyed today's video and found it helpful. If you did, please hit the like button and consider subscribing. Thank you very much for watching, and I'll see you in the next video.